Okay. Yes, it's the 31st of March, 2025, 5 minutes after 8, if you just join us. Tonight's session, it's about the ending of the first quarter of 2025. You know, there are 4 quarters within a year, and right now we are at the end of the first quarter. You know, obviously, I think we have discussed before that at the end of every quarter, you should review, just like most companies, they do a review of what have they have been doing in terms of the beginning of January. Beginning of January, a lot of companies, a lot of traders, a lot of people, they set out goals. Some people call it New Year resolutions. Okay. They set up goals, New Year resolution, in terms of what are they planning for the year. Just need to ask yourself this question: how far are you with your goals? you know are you moving in the right direction, or are you feeling like you are still in the same place as you were last year? Okay, so what you want to do is you don't want to have the same year over and over again. Meaning you are basically doing the same thing you've been doing for the past, I don't know, 5 years, 2 years, 3 years. So make sure this year is different. Okay. So the first quarter is also giving opportunity for you to review. You need to review. Reviewing means you are checking what are you doing currently. You are checking where are you currently. Welcome, Sandy, to the session. Yeah, welcome to the session. Okay. Obviously, if you're hearing this on YouTube as we upload on YouTube, make sure you do subscribe. Make sure so that every time we upload a new session, you are able to get a notification and you are able to see it. Okay. So, we say review. Secondly, you need to check what works. Check exactly what has been working. And then you need to check what has not been working. So what has been working, you go extra mile on it, meaning you make sure you maximize what actually works. What does not work, you eliminate. Because trading is already very risky, very much demanding. You don't want to be adding things that are simple, taking some profits from you and also even taking some time for you. Okay, so that is very important. And then the last thing that you should do is, if you have made some mistakes in the last quarter, you've made some mistake, you need to just say, forgive yourself. I've made some mistakes, I'm human, and then learn from those mistakes. A lot of people, they judge themselves, they even think there's no future, everything's not going to work out because of past mistakes. You've made mistakes in the past. What you need to do is understand that you made a mistake, possible, because you didn't know much, possible because of the maybe emotional states at that point, but you need to avoid mistakes that are costly. It's best to learn from other people's mistakes than your own mistakes. Okay. So there are a couple of mistakes like you're overtrading, like being in the space where emotionally you're not okay, but you're still forced to trade. There are many mistakes. Obviously, even generally in life, we make mistakes that do affect our trading in our personal life. Okay. So it's very important to not judge yourself by a mistake. If the plan failed, if whatever thing failed, know that you are not a failure, but whatever happened failed because there could be many reasons. Okay. So it's the first quarter. And another thing is that the first quarter, now you know what does not work And now you know what actually does work. Okay. And also, you know what you don't know. You know, there's a point where you actually don't know what you don't know. But now with the assignment, so we give out this assignment. The reason for this assignment is because it does cover a lot of technical understanding of trading. Okay. If you can do this assignment, complete it within one day, I'm pretty sure your technical understanding of trading, you know, is the best. Not the best. I'm saying that you have better understanding than an average trader. Okay. So if you understand, for example, what is a Quasimodo level in technical analysis. So this question obviously it cover number one, understanding of it. Secondly, it cover in terms of your technical analysis in terms of your knowledge. So in this question, obviously, give out a description, and then include a diagram. So a diagram is your chart analysis that shows a QML level. Okay. Second question, describe head and shoulder pattern and explain what it indicates in forex trading. Okay, so these are that few things of understanding chart patterns. The reason we had to speak about this is because I need everyone in this mentorship program to understand the theory behind the patterns. So a lot of times we understand patterns, but we don't understand the theory behind the patterns. Okay, so that is very important. Obviously, you can go through all the questions, but take some time to answer them. If you understand them, I'm pretty sure you'll be a better trader. Okay. So because it's a Monday, we need to review, you know, what has been happening in terms of the charts. Remember, April, we do have, obviously this week, you're going to have NFP. So that is the news that comes out in the first week of a new month. Because it is a report, it comes out early at the beginning of the month, you get a much higher reactions. When I say reaction, the market reacts more on these news, and because a lot of traders are basically anticipating this news, so you've got a lot of hype around them because these are the first news that come out early beginning of the month. Okay, so that is why a lot of people talk about it. All right, that is why. So if we can look at gold, what has been happening with gold this past 3 months? Yo, I think from the time where Trump was announced the president to the time where Trump was, there was whole this thing, the whole thing, the whole event about Trump. So I think we saw a huge move, obviously a huge move. I think in February there was that drop in terms of gold. We saw gold climbing higher until I think the 25th of February. Then there was a drop, and it dropped even towards to 835, that level there. Okay, what I'm expecting on gold, firstly, it goes along with what I'm expecting on the dollar. Okay, so from there, gold was moving in the range. You know, basically February, around about when it got to this point, basically gold were just moving in this range. This was the range. Let me just mark that range. So gold was moving within that range. Let me just show you what I mean. So gold was moving in that range. Okay, so that range. Okay, so that range. So, but then around mid-March, we started seeing gold climbing a bit higher. All right. So, a lot of tariff talks, a lot of weakness on the dollar. We're now seeing gold reaching a new high over 3,000 US dollars. Imagine. So, And I'm still expecting gold to move higher. So it says 125. As you can see, 3 touches, 1, 2, 3. Even this doji here. So I'm still expecting gold to push higher than these levels here. So it's at 125. So it needs to go to 50 and then 10 back and then goes to, over 140, 150, 160, and 200. It's going to keep climbing higher and higher gold because of what is happening in terms of inflation numbers. Okay. And also being one of the best, solid reserves or appreciating assets. So still expecting gold to push a bit higher. Okay. So obviously, if it does make it a pullback, the pullback is possible going to be around these areas. But for now, I'm still expecting gold to push a bit higher. Okay. And looking at the dollar, let's look at the dollar. Okay. There's this coin. Yo, a lot of people talking about this, but we'll see in another time. We'll talk it some other time. Let's look at the dollar index, DXY. Okay, this is a daily chart of what has been happening on the dollar. Okay, I think we've done some analysis on the dollar, and if you can look at dollar from the September last year, remember last year there were a lot of hikes. There were a lot of hikes, but now you can see that the Fed is actually cutting rates. So hikes means there is an increase in the interest rates. Whenever there's an increase in interest rate, that means if you are a saver, you're gonna make more money with your money saved in the dollar, as a dollar, or in cash. Should I say cash? Yes, cash. But in terms of the companies that are lending money or taking out loans, it's gonna be a bit more expensive. But if you're a saver, then you're on the safe side because the increase in the interest rates means more money in your savings. For example, I think we had a chat with a friend of mine. He was saying, in South Africa, there needs to be a lot of teaching around saving because people are not savers. And if you look at it, for example, let's say you've got 100,000 rand in your account, or let's just say 1,000,000 rand in your account, and you're getting about, let's say, 2% of that money every month, as an interest from your bank. 2% of 1 million is 20,000 rand. That could be a very nice salary for you, but a lot of people are not savers. When people get a lump sum of money, the first thing they think about is first spending, and most of them, they don't spend according to the budget. They spend based on emotions. Okay. So there is a different thinking when you're doing something based on planning and when you are doing it based on emotions or egos or for many other reasons. Okay. All right. So this is a dollar, right? So the dollar, since last year, September, based on those increase in the rates, it has been moving. And then suddenly there was a drop in the dollar. And right now it's just below at this zone, just at this zone. So I was expecting the dollar, after this drop here to make a pullback. So the pullback from there, so after that drop, I was expecting to make a pullback. So a pullback should be around this area here. So this is the area where we expect a pullback from the dollar. This area here. So pull back there and just do this. So I know whenever the chart has been moving like this in this type of compression, some people will draw something and call it a flag. Doesn't really matter. What matters is your understanding of the pattern. Okay. So this movement here, and also you expect the dollar to react even on that, on this here, on this here. All right, on this. All right, so let's go deeper. Remember, when you do chart analysis, it's very important to do like a top-down analysis. Okay, so another thing that is also important, it's very important to mark your zone to be very simple in the way that you understand them. Okay. So I know when the market has been moving like this in the form of a compression or in the form of a channel, I know at some point you need to look left. So you draw, for example, I will expect a reaction at that level, a reaction at that level, a reaction at that level, also a reaction at that level. Okay. So, but with the market moving like this, still 45-degree angle, this means they're stronger. Okay. For example, this push that is on a downtrend was heavy. It was straight, it was almost like a straight line down. Okay. But if you are looking at this movement going towards the upside, it's not really a straight line going up, meaning there's not much of aggressive buyers of the dollar, but we do have a bit more aggressive sellers of the dollar. Possible there's a lot of supply of the dollar. I think that's the reason why, Donald Trump said, no, for the next 3 months, we're going to stop USA aid because we want to limit the dollars that are in circulation. And we need to check, even the department that is led by Elon Musk, which is checking the efficiency, how efficient is the government in delivering services. So that's another key thing. Okay. So top down, let's look again at 1 hour. Okay, let's remove a few things here. Let's just remove a few things. So 30 minutes, what is happening? 1 hour, what is happening? Okay, so it went below all of these things and it came back to this zone here, right, around here. Okay, 30 minutes, okay, 4 hour, still around here. It's not really a clear picture, but what is clear is that the dollar is looking like there's a strong momentum of it dropping. Okay, let's look at the pair of the dollar, any pair. Let's start with USDCHF. Okay, I think I posted earlier this morning. Yeah, I think I did post this chart like this one. So what I posted was this. Last week, I did share that because of these pins here, these pins, you can see these pins here, I'm expecting USD CHF to drop towards this zone. Okay, so what happened? It dropped towards this area here. Okay, and then after dropping towards this area, there was a push towards the upside, which is here. Let's check how many pips. It's about, let's just say 70 pips. Okay, but right now, looking at this now, as we have said before, looking at this now, chances are this movement on the dollar is gonna react on this. Yeah, you can see. So remember, we said a drop, okay, and now there is a base here. So you expect the market to come back here, this level, okay, and looking at those zones, just look at this, look at this. So the market basically has been moving in this area. So let me just show you what I mean. Going up, dropping. So this is when when we say the market is moving in the range. Okay, going up. So what is happening when the market is doing this? There is a build up of orders here. and a build-up of orders even on the downside. Okay, so what happens? The first thing that the market did is move towards this area here, and then take out all these people that have got their stop losses where around here. Their stop losses that are around here. Took them out, dropped the price here, dropped the price towards this zone, towards this zone, dropped the price towards this zone and started going up. So chances are it might go towards even that area, just to clean up on the upside. The impossible drop. Okay. Because I'm still expecting the dollar to be more bearish. So from there to there, and then a further drop. Okay, let's just look at the Fibonacci. What is the Fibonacci telling us? So yes, so that is the 50 and the 60 level. So that is perfect level for it to drop. So it might just go above these areas here. So remember we said there's something called, if you're still new in trading, so we call this side, we call this side in the range, we call this side your resistance or your ceiling, resistance or your ceiling, resistance or your ceiling, and we call this floors. So sometimes the market will break down to that the floor and towards this level of demand. You can see there was a huge bullish movement, and then market moves in the range, and then there was a drop, come back to the similar level as that. Now it's moving up. Chances are may go up towards this side. So it might continue tomorrow, move towards this area, just break above this level. Remember, if you are selling something and you go to the area first time, you go to the area third time, second time, you go to the area third time. Remember, this area has been visited even before. So there are higher chances that it can go further up and then make a drop. Okay, because it will be the first time coming back to this zone. So it came back here, it broke below, touch, drop. Now it's possible of it coming back here around the 1561 level of the Fibonacci, making a further drop. So this is just the CHF. So pushing up and then a drop. Remember, we've got NFP this week, so that can be another push towards the upside and then a further drop. That is USDCHF. Okay. I think we've been waiting on the drop on this thing for quite some time. So because of that bullish movement that can be experienced, that we might experience this week, I'm still expecting the pound to come to this area here. All right. So in the past, 3 months, nothing much is happening. When I say nothing much, I mean looking at the first quarter. This is January. In January, the pound was beaten by the dollar. Okay, and then it made a lot of recovery. This is January. See how, so there was a bit of recovery of the pound. Remember last year there was a lot of hike on the dollar, so we saw that the dollar had the upper hand. But now you can see another push. This is February. So February, I think it closed on the high in February. Okay, on March it started even on the higher high. So we can see now the market has not been moving much. Okay, it's been moving in the range. Okay, you can see this is the range. This is the range. Okay, look at this movement here. So this was from there to there. Okay, so February was very positive on the pound because it started off here. This was the starting of the pound in February, and this was a very positive month. And we can see that January was a not so positive month. February, basically January was a recovery after that huge drop. Okay, and then there's this movement and another push again. So if we say this as the first push, and after this, now there is a second push here towards this area here. Now there was a dead push here. Okay. So after the dead push, we can see the market is now moving in the range. This is a range. Okay. So if we look at the higher time frame, what is it telling us? So now the market is moving in this range, in this area here. Okay. So there are some chances while the dollar is pushing up that this pair can literally drop towards this area here of demand. Okay. So it can drop towards this area here and push further towards that area, and then that is where we can experience that. Okay, but these are some of the expectation. So while building up towards NFP, the pound can drop, and then push further afterwards. Okay, as investors and traders are starting off selling the dollar. Okay, is it making sense? I'm hoping that it does. I'm hoping that it does. Okay. So again, we're gonna look at the this is USD CAD January. You can see in January, this was the beginning of February. Okay. This was the beginning of February. We saw that huge drop on the dollar. And okay, a bit of a push, but not much. Not much is happening on the dollar. I think we have analyzed it that is not much is happening on the dollar, but the way it has been moving, okay, so not much is happening on the dollar, by the way, not much. Okay, so just remove that. Not much. Let's just delete that. Okay, let's just quickly see if is there any. Yeah, nothing much. No? Just remove. Okay, so it can go. Let's go on the daily. Okay, yeah, sometimes when there's not much is happening, you don't actually have to force it. Yeah, I don't see any nice trades here. Okay, I don't see any nice trades because even this thing here is not giving much, but there could be a bit of a push towards this area here, as new tariffs on the CAD, on the Canadian dollar are implemented. So that can push obviously the Canadian dollar to drop heavy and the dollar to be more bullish. Okay. Yeah. That can be a push. That can be a push. But if we take this as the high, we take this as a low, we draw a Fibonacci from there towards that area. You can see the strongest area. What happened here? There was a bit movement here. So chances I can go to the level of 61, which is this area again, and then make it drop. So that could be the possibility on the USD CAD. So watch out for those tariffs and watch out. Trump sometimes he says things, and the market moves. So because Donald Trump is in that White House, there's a lot that can possibly happen. Otherwise, if you've got any pair that you want us to do analyze, please don't hesitate. I think another thing that has been interesting for me in the past 3 months or in the first quarter has been the Bitcoin. It has been the Bitcoin. I don't want to lie. Cryptocurrencies are the new gold, even though gold, is definitely moving. So I'm still expecting this Bitcoin to push further up, especially towards this area here. And if you can see, This here is a very nice QML. Okay, so the price pushed up. Okay, and the price dropped. The price dropped towards this area, and the price moved, and it formed some nice base, and then dropped. So, for example, just to give you a, so if you call this, let's just say this, no, this, if call this a low, and you've got this here, okay, so this here is your lower low here. Then you can expect the market to come back here and then make it drop. Okay, possible. This can be a take profits. Take profits. And I'm still I am expecting Bitcoin to push further up. So it can also go as far as 90k USD, 90k USD. But we'll see. I'm expecting to push it. I'm expecting to push a bit higher. I'm expecting Bitcoin to push a bit higher. Okay. What has been happening on Bitcoin for the past 3 months? For the past 3 months, let's see. Okay, from December last year, obviously because the dollar strength was there, you can see the Bitcoin has been dropping, up until around about, let's say, close to the beginning of March. But I think the change was just around the end of February. Okay, I think because last year, obviously, because of these hikes that were happening on the dollar in terms of interest rates, we saw that the dollar strength was there. But when when the cut started happening, that is where you saw an improvement. Also, even not just the cut, the more countries adapting or adopting the Bitcoin usage, that is where we saw an increase or the rally on the Bitcoin. And you saw that reacting even on the zone. Now it's here. Okay. So I'm expecting obviously Bitcoin to push towards this area and make a reaction in that area, come back here, then push further up. Okay. So that is my expectation on this one. I think another interesting thing that's been happening. What else has been interesting? That's interesting. Okay. Oh, let's check out indices. Instead of the Dow Jones. I think I've said it a couple of times. Yo, that's a very nice movement. Okay. And it's reacting right on the zone. Look at the time. Look at the time. I think we've done analysis on this one and what is happening a lot of times. So US30, see, nice one, nice reaction in that zone. But in terms of what has been happening for the past 3 months from January, so January, I think, was a good month for US30. But the beginning of February, that is where we started seeing a decline, and those tariff wars, made a huge impact. Those talks by Trump signing things, and that's what actually caused a lot of problem in terms of US debt. Okay, so China, doing the same thing what the USA is doing. That's what caused this to make those drops. So this was a drop, first drop around February. That was a very nice drop. And then this was another drop towards this area, and then experiencing another drop. If you go to the daily, you can see this drop is in line with that zone on the left. So which zone? This is the zone. This is the zone. This is the zone. So it's in line with that zone. Okay. So, and you can see that there's a movement here towards this area. And like I said before, after reaching this highest high, there was a drop. This was the first drop, and then another drop again, and then a breaking on that level. Now it's here. Come back again. And even this movement here is pretty much aggressive. You can see there the daily. This is a double marrow, like a very big W here. Okay. And started moving. So I'm still expecting a reaction where on this doji. Okay, so a reaction should happen there. That's where I'm expecting a reaction. But possible that reaction will be revived, or you can see it here. Okay, let me just remove everything here so things can be a bit clear. Okay. So first quarter, you reevaluate, you review what works and what is not working. Then you focus what you need to do in terms of your knowledge and focusing on what actually works. Okay. And then finish off the assignment that we've sent. Go online, learn as much as you can before you answer. Take your time, but it should not take you more than a week to research that information. Okay. So I'm expecting this to react, but after, let me just show you what I mean. Okay, sometimes as a trader, you okay, show you what I'm seeing here. Let's go on the daily. Okay, after the drop below these zones. After the drop below these zones. Okay, so that can be S1, support 2. So what we expect the market to come back on this area here. So this area, the key ingredient is this here. So this is a key ingredient because after that hammer, there was this bullish movement. First push up, second push up, and then a third push up. Then there was this drop, again drop. Okay, and then a drop, first drop, then a second drop, and then a third drop towards this area here. So you expect, obviously, after this zone, the market to go below these things, below this 1, 2, come back here, and form a W, push further up. And the reaction should be there, okay, on this. That is the doji on this. The reaction should be there. That's where I'm expecting a reaction for a drop before going further up. Okay. Remember, the market moves in stages. In a series, doesn't just go straight up. It goes in a series. Okay. Even this one here, you can see a recovery, but even on Nasdaq, I'm still expecting a reaction there. When it get there, should actually make a drop. Let's go further to the bit of a higher time frame. Same story, okay? Since last year, obviously Nasdaq, since September, we've been this huge rise. But if you mark there, you can see there was a bit of a reversal when it got to this high, just around that high. So that was in the middle of February, okay? They started making those drops, okay? If you count the drops based on the base, so this was the first base, that was the nice first drop, and then another drop based on this base here. So that's basically another drop. And then the next base was here. And it's just in line with that thing on the left where the market really broke above and it does and went back even to almost in that zone. So if you mark that area, you can see what's happening on the left. Okay, so we mark that. The beginning, this was where all the bullish movement started off here. It started off here after this candle. So this was the first candle and then movement. You can see here on this is the left, this is on your right. Now you started seeing that bullish movement. So I will expect it to react on that candle, that bearish candle.